Hello, everyone. Welcome to another episode of the Startup Voyage podcast. Have you ever wondered how the rapid demand for blockchain and AI has sustained? Is it more beneficial as digital progress or a negative impact to the environment? Now, the explosive growth in blockchain and AI demands immense computing power poses challenges in energy consumption and sustainability. Hive Digital Technologies, with their advanced data centers, is at the forefront of addressing environmental concerns by providing sustainable, high-performance computing power. Since data centers are large energy consumption platforms, where this energy comes from is of utmost importance. This is why Hive ensures their HPC data centers are run by renewable energy sources, hydroelectric and geothermal power, and that premise dictated the location of all the data centers. Now, professionals from every industry can leverage accelerated computing power on demand from Hive, from training machine learning models, rendering astonishing special effects in video game characters, to enabling scientists to predict storms and hurricane paths. HPC empowers all that endeavors in technology. Today, we're honored to have Aydin Kilic, the president and CEO of Hive, as our guest. And he's joined Hive back in 2020 and has been instrumental in steering the company through periods of significant growth and expansion. With a 20-year career marked by a blend of entrepreneurship and engineering, Aydin brings a wealth of experience to the table. He's an electrical engineer with a deep understanding of cryptocurrency, capital markets, and real estate development. His expertise doesn't stop there because he also has a rich background in scientific research. Before his tenure at Hive, he founded Fortress Blockchain Corporation, a Canadian public company in the blockchain industry mining BTC. And his multifaceted career and his role at Hive, especially in the context of the company's commitment to green energy and ESG strategy, make him a pivotal figure in the blockchain and digital currency space. So I'd like to welcome you to the show, Aydin. Thank you for joining us today.
Hey, Arthur. Thanks for having me. Great to be here. Thanks for the intro. I was sort of like, wow, that's my life.
Well, I hope
Wild ride. Yeah.
Yeah, that is good. Well, I mean, look, I'm interested. I know you, we talked about, you founded a company before doing Bitcoin mining. Share that journey in even getting into mining and, moving into Hive. How did that happen?
Yeah. So in 20, I started investing in ICOs, even a little bit looking into them previously to that. And also, me and some of my friends that lived in Vancouver and Richmond, we had bought some miners because we were going to set up just a small facility in a warehouse. And so I had these two prongs. That was my first exposure into crypto. And then I saw Hive go public and hit $1 billion market cap in a month. It was amazing. I was like, wow. And I knew of a 2 megawatt Bitcoin mine in Washington State. So basically, long story short, I founded Fortress Blockchain Corp. We acquired this 2 megawatt site in Washington State, which was big back then, raised $20 million, took it public on the TSXV as a tier 1 issuer. That company is still public today. It's Cathedra Bitcoin. I sort of arranged a succession plan when Hive, led by Frank Holmes, the executive chairman, invited me to step into the role as president chief operating officer at the time, summer 2020. And over the course of that journey, I then got promoted to CEO at the beginning of this year. Beginning of 2020. Wow. It's been Frank and I, we met on a panel. We met on a panel 6 years ago. January 28th, the Vancouver Resource and Investment Conference called VRIC. And Frank's a legend in the capital markets. And he was on like 5 stages that day. I was like, whoa, who's this guy? And I was on a panel with him. And he was representing Hive. I was representing Fortress. And so we were on a panel. It was a friendly debate. And we became friends. And I sort of had become a mentor to me over the years. And that's how that journey started. And it's been just, riding a rocket ship since. We've done so many things at Hive. I think my team gave you did great research in terms of the media brief, but one of the things that we didn't even get to touch on, I'll talk about more later, is we're the first and only crypto miner that has successfully built a Bitcoin mining server using Intel microchips, and we did that 2 years ago. Yeah, Intel released a chip called the Blockscale. Hive is an innovative company. It was first an Ethereum miner with GPUs, and that's very significant because GPUs were used to mine Ethereum, whereas ASICs or application-specific specific integrated circuits were used to mine Bitcoin. And so Bitcoin miners mine with these servers called ASICs, and they're about, 3 kilowatts each, which is about 2 hair dryers. And
Wow.
GPUs are not as power intensive. A single GPU is, maybe 300 watts. And so you then take those GPUs and you put them into a server. It's similar, but it's different. And so Hive has this rich history of being a large scale GPU operator. Later on, Hive also became a Bitcoin operator, and we'll talk more about that. But the GPU component is very important because that is what gave us a leg up to get into AI infrastructure, which we kicked off last year as well. So a lot of fun stuff in our technology ecosystem. We're about innovation. We have a high revenue per employee business model. We basically want the best of the best working for us. And we huddle over 7 time zones every day. We've got guys in Europe, Montreal, Texas is where my chairman is. I'm in Vancouver. Our data centers in Sweden and Iceland, Quebec and New Brunswick. So we're geographically and globally diversified, all using hydro and geothermal energy.
On the mining side, and I'm sure everything's on the news right now about this Bitcoin ETF. A lot of crazy movements, right? It's now, it's not really considered a crash, but maybe Bitcoin is recorrecting itself for whatever reasons. I'm sure there's a lot of analysts kind of figuring that out. What is your impression about the ETF? A good thing, bad thing?
Yeah, so I think broadly, it's something that anyone in the cryptocurrency ecosystem would welcome, at least in the idea that it will encourage more people to perhaps invest in cryptocurrency because they'll have an easier channel to acquire it. I think it's important to point out that if you're buying an ETF, the spot Bitcoin that the funds will be owning, they'll have it in their cold wallet storage. So it more becomes an investment tool, which is fine. But I wouldn't expect more transaction fees on the Bitcoin network as a result of people buying and selling it. But then again, I'm sure the ETF will have to settle at some frequency. I don't know. Do they settle daily or weekly? If their position, their float changes, how quickly do they have to top up and buy or sell Bitcoin? Now, we've seen Bitcoin fall to below 239, just below 40, within a couple of weeks of the ETF approval. So some people are like going, what the heck? Well, I think broadly in the media, there was a lot of hype and excitement that led to a rally in Bitcoin price to 48 before the ETF was even approved. It was described as a sell the news event. And then once the ETFs got approved, there was a large outflow of capital, specifically from the Grayscale ETF. And the thing is, Grayscale, which is a digital currency group, they also own CoinDesk. They're kind of a conglomerate in the world of crypto. They originally had a product called Grayscale Bitcoin Trust, right? Which was a closed-end fund that they allowed people to invest in to get exposure to Bitcoin. But the funny thing, because it was a closed-end fund, it always traded at like a premium or discount to its actual Bitcoin holding. So it wasn't an efficient investment vehicle. But then once it got approved as an ETF, there was a big outflow of capital because I think people wanted their money in ETF with lower fees, and Grayscale had these higher fees. So the idea is the money flows out, and once it flows back in, whether it's back into Grayscale, but probably BlackRock, Fidelity, all these other ones, we'll see more of that spot demand for Bitcoin and hopefully an increase in the price. But, I even read that there was an FTX liquidation because they owned $1 billion of Grayscale Trust, right? And so that $1 billion got liquidated. So, when you've got a bankruptcy proceeding liquidation, the traders aren't probably saying, oh, I hope we don't, crash the market. It's like, oh, law orders, we have to sell this Bitcoin. It's like emotionless, corporate citizens or something to that effect. Now, that's my 2 cents on the ETF. I think that, a crypto enthusiast like a Bitcoin maxi, I don't know, like if you ask the hardcore guys, did they like the idea of the ETF? But I'm pragmatic, right? I'm an entrepreneur. I think the more that you can have the powers that be embrace and define a framework for Bitcoin to flourish, of course, the better it is, Of course, there's going to be people that are saying, this is my crypto, this is my cold wallet, I'm not putting on an exchange, I only send anonymous transactions, the hardcore guys. And then you've got people that have Coinbase accounts that have uploaded their driver's license and report their crypto gains on their personal tax. And I think that broadly, for society to get comfortable and tangible with cryptocurrency as a means of investment or exchange, you want to have that more tactile usability. And I think that the exchanges that came about in the last few years, like Gemini, they went for SOC 2 compliance early on, because I'll give you a little bit of a history lesson. We're NASDAQ listed, we're listed on the TSXV in Canada, and we're even listed in Frankfurt, right? As a public company, we have disclosure requirements, we have audit requirements, right? So it's highly regulated. And for us to get our audits passed, the Canadian Public Accountancy Board, because the TSX is our home listing jurisdiction, in 2019, they made it very difficult for crypto companies to get their audits done. And almost every company in the crypto space filed their audit late, because no auditors would sign off. All the big four, PwC, KPMG, Deloitte, et cetera, all stepped away. In Canada, MNP was a big one, and they all backed away. At the time, Fortress had MNP, and all the big four, EY is the other one. We're not touching crypto. They dropped crypto files mid-audit. Companies are like, what the heck? This is unprecedented. And then there was 3 small shops in Vancouver that took it on. CPAB made a very onerous, some would even call it draconian, mandate on how you would have to audit crypto. And it was just super complicated. But, it set the bar higher. So, seasoned executives and sophisticated finance teams could, go the distance and say, okay, yeah, we can fully prove exactly how much Bitcoin we've earned. There was this thing called revenue recognition. Prove it, and you have to download the hash tables from your pool.
Right.
And get very granular. And so I think it just set the bar higher. But the point is that this was what it took to become a publicly traded company after the initial hubris, right? So a bunch of companies went public in 2020 and regulators kind of started getting a handle on it, made it a lot tougher. So that's just the way it goes. But now you see in 2020, all these other companies that came, like Hive was a pioneer. We laid the tracks, right? And then in 2020, all these new companies, Marathon got really big, Clean Spark, etc. You have Bit Digital, Terrible. They're all kind of like second wave, right? Hive, I think, Hut 8 and Bitfarms are the original 3 big crypto miners from the 20s era, and that are sort of the large scale ones. And so here we are in 2024 now. So you look at how long it took to get a Bitcoin ETF approved. Well, our chairman, Frank Holmes, he actually wanted to start a Bitcoin ETF back in 2016, but he realized he couldn't do it. That's when the whole crypto mining thing, Frank was a co-founder of Hive. So that's how Hive came about, right? So it's about having highly regulated, like exchanges now, they're highly regulated. And that was my point, talking about SOC 2. That was a requirement auditors had for our pools. Like these are independent like tech startups, and you ask them for SOC 2 compliance. And eventually they got it, but it took a long time. And there was a lot of really extensive analysis done where auditors would have to hire third-party tech consultants to sign off on their review of the crypto mining companies. And eventually companies like Gemini got that SOC 2 compliance as a crypto exchange. So yes, regulation is necessary for adoption, and those that can, make the cut and figure it out will be the businesses that exist, right? Like not every internet startup from the dot-com bubble obviously made it, right? And so now there's like massive internet companies that are venerable. So it's a good mix of, I think, rigor and innovation that will allow you to flourish as a crypto company.
Well, I think back then, for sure, these like the KPMGs and PwCs, they probably didn't have the knowledge or talent inside to even learn how to audit. I was with a outfit that basically did a backdoor listing onto the Hong Kong Stock Exchange, and they also went through to get the government's or the regulators' first virtual asset service provider license. Through that effort, they went through everything, same thing, they look at audits. Should we do SOC 2 compliant? Who's going to audit our code and smart contracts? They even got insurance. So there's this whole push to get insurance from Lloyd's of London. And those guys for sure didn't understand how this works, right? And we had to go through all the security measures, 4Is, and what happens, transferring, air gap to devices. It was really crazy because they basically took the understanding of how traditional markets work today, and they tried to align every single thing to how it gets done in this new digital world, and that's how they end up approving at the very end to get the license. But it was a long time. It was like 24 months, right?
Yeah.
It was a long time.
So you know exactly what I'm referring to, because
I know.
It's land,
Yeah.
You got lawyers, accountants, CFAs, engineers, like everyone's working like, okay, we got to make this, it's like interdisciplinary expertise.
It definitely is. And then sometimes you also wonder, even though they do the audits, like for example, I was just on another podcast with a Web3 founder. They were going out to look for third-party auditors, and they charge about $40,000 by contract, or I guess, I don't know what the length of the scope of service, but $40,000 to a startup, it's a lot of money just to get audited. And if something were to happen, there's no liability on that auditor, right? It's kind of like, oh, we did our job, we got our money, and there's no insurance, right? So you're kind of like, okay, I'm going to pay this money, but what does it get me, right? A checkbox, to move forward and, public perception as we've done our DD. So anyways, what do you think? So you're saying that, so I do agree, but I think if we look at all the ETFs and how the capital markets work today, they probably settle, it's kind of like managing the balance sheet at the end of the day. But, and they don't do 24/7 crypto trading, right? So that's the biggest difference. But let's talk about Bitcoin Ordinals. So that came out in 2022. That has increased the fees on Bitcoin network. Has that increased in processing power? Do you think that will pick up as mainstream and become more of an impact for the server?
The Ordinals were, I think, a very impactful, important, and historically relevant, and very relevant for the future as well, aspect of the Bitcoin ecosystem. Why? Because Ordinals allow the advent of information to be stored on the Bitcoin blockchain, in addition to just the rudimentary financial transaction data, right? So as your viewers likely know, but it's always good to get a simple explanation and recap, and maybe some people don't know this, but the Bitcoin blockchain, right, is a ledger. And what is a ledger? Well, it's a chain of blocks. Imagine your credit card statements for the last 10 years. Every month you get a credit card statement. What does it say? Where you spend your money, the date, and how much, right? That's all the Bitcoin blockchain is. Each block is about 2 transactions per block. Your address, so sender address, receiver address, amount of Bitcoin, and the date. And then there's a block header and Merkle tree and all these other tech things that go into the hash algorithm. But that's really what it is, right? And you can look it all up on any block explorer, which is really cool. Except the Bitcoin blocks come every 10 minutes approximately, not monthly. And so that is the core information. You can go to Block Explorer, see, and that's how you can validate your transactions gone through, right? You could copy and paste your own hexadecimal address, put in a Block Explorer, see every single transaction you've ever made. And if somebody you sent Bitcoin to, you could see their address and you could see if they received yours and every other transaction they've made. So it makes it blockchain, right? So it's awesome. And it's immutable. You can't hack those records, right? That what you see on the website is just a web API that's just, showing you what's stored in the blockchain, but the blockchain is immutable. Now, how do ordinals fit into that? Well, you're able to put information onto the blockchain. You inscript them, right? And so you do that, you kind of have these finite units, like the smallest divisible unit of a Bitcoin is 1/100,000th of a Bitcoin is called a Satoshi. And so because that's the smallest denomination of a Bitcoin, now you can make Bitcoin in effect non-fungible because you can identify which Satoshi of which block each ordinal was. And then it's really cool because there's started to become these things called like rare sats or like rare Satoshis. So it was, for example, a significant Satoshi in terms of a block. So 100 million Satoshis in a block, right? Well, there's 900 blocks in a day. The significance is that you have 900 Bitcoin are mined a day. Each Bitcoin has 100 million Satoshi. So how many of those Satoshi are the first Satoshi per block? Well, There's only 9, right? So that's still per block. It's the first one out of 100 million that constitute that. Now, even more rare, the difficulty changes every 2 weeks. Imagine you had the first Satoshi of the first block at the difficulty change, right? That's even more rare statistically, right? And what if it was the first Satoshi of the first block at a halving event? Though there's literally only, I guess, 12, 16, 20. Yeah, there's been like 3 halving events, right? So
exactly.
12, 16, 20, and now it's going to be 4. So there's only 4 of those Satoshis in existence, right? So they're like mega rare, right? So that's cool. So then there's like collectability, and we've got some uncommons. Like we have a few first Satoshis of a block, right? Which is super cool. And then we've got so there's a whole table you can find online that explains there's different nicknames. There's like uncommon, rare, etc. And we've been made offers to sell these Satoshis at like five times face value. Like we could sell like 200 Satoshis for like 50,000. Satoshis is like, take the price of Bitcoin divided by 2. So 1 Bitcoin is 40. Right. What's that divided by 100 million, right? It's a fraction of a penny.
Yeah.
It's a fraction of a penny. It's still a fraction of a penny, or maybe it might be 9 cents. I think that was the number we looked at last time. But someone's going to pay 50 grand for it. That's crazy, right?
That is crazy.
That's 5x.
Yes.
Yeah, that's what it was, like 9 cents. 2 sats was like 9 cents, right? So, the collectors are like, oh, wow, like that's going to have more long-term intrinsic value, right?
Yeah.
So it's kind of like real estate in Hong Kong or Vancouver. There's only like so much land, and so people will pay premium. But moreover, we're just talking about the sats. Now you got to talk about the actual information, right? People are putting like information on Bitcoin. So there's like, Taproot Wizards, I think was our friends at Luxor's mining pool, and they were doing a lot of work with Ordinals. We work with them. They're great. And they were working with the guys that did Taproot Wizards. And there's these kind of silly drawings of, I shouldn't call them silly, they're cool drawings, but very kind of rudimentary digital art. And people were putting them on the Bitcoin blockchain. This is like Bitcoin's answer to the NFT world, right?
Yeah.
But, whereas the NFT world's like, hey, like I got a Bored Ape and I drive a Lambo and I'm in Miami. Like that kind of whole like oversold, like crazy era.
Yeah.
Bitcoin is more just like, hey, we could do the same thing. People are paying a premium, but like Justin Bieber isn't buying a Taproot Wizard, right? So it's more like, crypto nerds like are like getting these things, right?
Yeah.
But anyways, what it did more specifically, and might be interesting for your viewers, is it increased the transaction fees on the Bitcoin blockchain dramatically, right? So we saw like 25% transaction fees, right?
Yeah.
Which was pretty crazy. And so we, typically to put that into context for everybody, like normally transaction fees are like 1% to 2%. Yep. And what I mean by that is, the block reward is every day, right? 900 Bitcoin are awarded on the blockchain, and your contribution of the total hash rate, you get a pro rata portion of those 900 Bitcoin as your reward. So if you're 1% of the Bitcoin network, you get 9 Bitcoin a day. And that's pretty much what we did on average. Like we mined over 30 Bitcoin in 2020, right? So it's about 9 Bitcoin a day on average. We average about 1% of the global network. If you're like in the global network, well, you get, Bitcoin a day. So that's block reward. But on top of that, you get this little extra, and that's a transaction fee. And what that comes from is when users send Bitcoin, it says, oh, like, how much do you want to pay? And some people go like low, medium, or high fee. If more people are saying, hey, I don't care, I just want my transaction to go through quick, they pay a higher fee. That goes to the miners, right? But that's sort of like the weather. It ebbs and flows and it changes.
Sure.
Ordinals drove a lot of transactions, which is a little bit different than the whole ETF thing, because again, if people are buying an ETF, at the end of the day, if they settle, like, okay, so we got to go buy a bunch of Bitcoin. That's like one big transaction, right?
Yep.
But anyways, it's all cool. But that was a great question. I'm glad you asked that.
Yeah, okay. Well, I wanted to ask you something else, and this is around a focus on ESG, environmental sustainability, and everyone's got the perspective of what is actually being done, what is conspiracy theory, do people really even care? And there's a lot of companies getting into the space. Number one, maybe it's a perception, right? We're a company, we're supporting ESG initiatives. Maybe they might get some funding from the government, so on and so forth. What is your take and Hive's take as far as really attacking your operations? And yes, you can make it eco-friendly, but are you doing anything else to inspire or help, other people get into this space and make a difference as well?
Yeah, that's another great question. I think that, Hive has been an innovator and a leader, being ESG conscious before that word even existed. We were ESG before it was cool to be ESG. And really that went back to our chairman, Frank Holmes. He had this vision about green and clean Bitcoin. Bitcoin mined with green and clean energy really is paving the way for institutional Bitcoin, right? Because yes, Bitcoin is an energy-backed currency. Let's prove that you can make Bitcoin a sustainable, digital, decentralized currency using renewable energy. And that's tougher because obviously there's less renewable energy. If you can only use renewable energy, well, by definition, that's a subset of everything available. And a lot of the bigger crypto miners, use natural gas, maybe coal, just grid mix, whatever they can get their hands on. Oh, there's a big old substation. We're going to build up a site next to it. Is it 40% coal, 30% gas, 20% nuclear? Doesn't matter. Is it cheap power? Okay, good. That's not us at Hive. All of our data centers, we're in northern Sweden, not in Stockholm in the south of Sweden. That's the capital. We're in the north of Sweden by the Arctic Circle. Seriously, it's by the Arctic. You can see the Aurora Borealis up there. It's a town called Boden, right? And what do we do in Boden? We sponsor the local hockey team, right? They have the Hive logo on the jerseys and it's called the Hive Arena. Kids under the age of 16 can go watch the games for free, right? And this hockey team has spawned 2 NHL Stanley Cup finalists. So it's, it's a serious team. Yeah. They've got their own stadium. We give back to the community. We sponsor the local sports teams in New Brunswick as well. And in northern Sweden, we're also developing a greenhouse that's going to recycle the heat from our 30 megawatt facility to grow cucumbers and tomatoes. An engineering study was done. It was something like 900 tons of tomatoes annually can be produced, or cucumbers, which is phenomenal, and slightly less cucumbers. That's, I think, 700 tons. And it's remarkable, right? Because now you can grow produce by the Arctic Circle. So now think about this. Now it's carbon negative. Because guess what? Now you don't produce in the winter from Spain and Italy because you can grow it in Northern Europe. So now you're reducing the carbon footprint needed, also using energy that's green and renewable. So these are the sorts of things we did before the whole idea of ESG came out. And we've long been proponents of the mindset that green Bitcoin should trade at a premium. And I remember Frank was speaking at Miami Bitcoin in 20 on giving a keynote speech, sort of expressing it. And it was interesting back, this is before ESG was a big thing, but some of the people in the audience were like, didn't even like the idea of making a case for green Bitcoin. So there's a lot of people with divided opinions. Like some hardcore crypto guys I know, they hate the idea of ESG. For us, it's like, hey, we've always been green energy from the beginning. Yeah. Now there's this whole thing where companies have a mandate to invest in ESG companies. All right. Well, guess what? Let's see. Environmental, renewable energy, social, sponsoring a local sports team, right? Doing a greenhouse. We're doing heat recycling in Quebec. We heat a 200 square foot factory with the heat from our 30 megawatt Bitcoin mine.
Wow.
Right.
Yeah.
And there's staff that work in there, right? We're doing that. Like we have a glycol pump system. So it's kind of nice when people acknowledge these sorts of things and say, hey, this is ESG. So we've never necessarily said, Hive, we are the ESG friendly miner. But when you look at everything we do, we tick those boxes, right? And so if somebody is saying, hey, you know what? I want to buy Bitcoin or invest in a company that is a Bitcoin miner using green energy or has ESG initiatives in place, that's what we've done just as part of our company DNA.
I like that recycling of the heat. Actually, that's a very simple.
Me too.
Very
it's awesome.
smart.
I've been there.
Yeah.
It's cool.
Yeah. All right. So let me ask you, I guess, for any person, any layman who's trying to understand energy consumption, is there a very simple way to get someone to understand how much energy is actually consumed on a daily basis, even in a state, in a country, to just understand the magnitude of what the Earth uses in a 24-hour period? Is there any simple way to say? Yeah.
I mean, basically, we measure our data center consumption, like our facility in New Brunswick is 70 megawatts. Quebec, 30 megawatts. We've got 32 megawatts in Bowdoin, megawatts usually. And globally, like our total portfolio is 100 megawatts. But if you look at what does a country consume or what is, a region or a city consume, they'll have different things. Like, I don't know off the top of my head how many megawatts the city of New York consumes, but it's a lot for sure. Usually power plants will be, perhaps a few hundred megawatts. You might have a hydro dam that's a few hundred megawatts. I've seen a natural gas plant in Texas that I think was like 1 gigawatts. Depends on the region, right? Texas is a massive energy producing region, right? Energy is in physics is just joules of energy. Megawatts are just a unit of power, which is joules per second, or energy as a function of time. So, the oil that comes out of the ground is combusted into energy, but it's not like you use crude oil to power a crypto mine. Although one thing that Cathedra did, some crypto miners were using flared gas, right? And converting that flared natural gas into electricity using generators, right? The idea is to reduce the methane imprint, right? So it's all energy. And the Bitcoin Mining Council, which Michael Saylor chairs, tracks all these statistics, and they do a great job. Bitcoin has this reputation as an energy intensive industry. Yeah, it is, but it's the $1 trillion asset class. If you look at the amount of energy that the global gold mining market uses, think about all the energy expended in excavating gold, all the raw ore, and then extracting it into gold bars, and then storing it and think about just the energy to set a bunch of gold bars into a vault, that gets mined in Africa to New York. Like, just think about since the beginning of time, right? So, I think people need to just think about the whole ecosystem. And then moreover, crypto, I think globally the average, or the Bitcoin Mining Council, 66% renewable energy. And globally, Bitcoin mining is something like 50%, right? So a lot of crypto, look, if a guy in Kazakhstan or Iran is using like natural gas, there's nothing we can say about that, right?
Sure.
But what are you going to do? Like, if there's a factory that makes tires in China that pollutes, what are you going to do? Shut it down? People are still buying the tires. And what can I say, right? All you can point to is the best examples that are trying to be renewable, sustainable, etc. So we're trying to, lead the way. I remember, I think it was PayPal had this crypto summit. They had all these different stakeholders, and they were like, hey, what do you think think if there was advocacy for this polluter pays, if you're using dirty energy, you pay a polluter tax. And I was like, it was all these proof of stake guys, a couple guys from Solana or something. And they're like, yeah, polluter pays. I'm like, oh yeah, that's a great idea, because the guy in Kazakhstan that's got an illegal crypto mine, he's burning coal, is just mail him the bill. He'll be like, oh yeah, I owe this 2% tax. Here, where do I sign? I mean, just no. Like, what you got to do is you have to incentivize people to leave, and so you should ascribe a premium to green energy coins, whether it's a 1 or a 0.5% or 2% premium. That's the way that you'll incentivize, because then it also make it more commercially viable. It's everybody wants green and recycle. Okay, put your money where your mouth is, right? Usually consumers don't choose that, even at the grocery store. I mean, I do. I try to buy organic, and I try to buy products that are good quality, but don't have like unnecessary, like have biodegradable packaging and so on. But it's just the mindset, right? So the crypto Bitcoin, when you look at the value, you look at how many transactions. I think it was something like I remember there was a council. It was this guy Jack Mallers, and it was a MicroStrategy Bitcoin forum. I think a year ago. And I think Bitcoin transacted like something like $7 trillion of value last year. And you look at how much value gets transacted in the Bitcoin ecosystem. So when you ever measure all that up, and it's, the decentralized digital currency that is backed by energy. So it's not just something, it's not a proof of stake coin. Oh, boom, let's go make Arthur Aydin coin, call it AA coin. Go, mint a billion with some code, airdrop some to our promoter pals, do a big pump and dump. I mean, no, the world doesn't need more of that, right? The world needs less of that, and we need more adoption of Bitcoin.
Yeah, true. Well, I mean, I want to say congratulations, because you guys recently got funding, some new financing, but 28 million. I think I work with a lot of early stage startups, and it's really amazing sometimes the allocation of how funds are used is, especially when you're inexperienced, how it gets used in many different ways. But you guys are well established, and as you mentioned, on different stock exchanges. What are your plans to use this money, and what are the focuses for your company in this expansion?
Well, we actually made an announcement right after the financing that we bought 7 Bitmain S21s. They're the next generation, the latest and greatest Bitcoin miners. And for your technical viewers out there, these machines have a 17 joules per terahash efficiency ratio. Right. And so what that means is for every hash that they produce, they only consume 17 joules of energy. The best miner on the market right now is about 22 joules a terahash. So it's a significant increase. And we did that in anticipation of the halving event this April, because what's going to happen, and there's these crypto mining economics, and it's something that I, honed my expertise in over the years. Being an electrical engineer, I love my mathematical models, and I did a lot of, vector calculus and wave mechanics and all that stuff when I was in school. So, you learn to think of multidimensional mathematics, and in crypto mining, where when you solve for ROI, you have Bitcoin price, difficulty, electrical price, machine efficiency, and dollar per terahash purchase price of the machines that you buy, right? And these 5 variables will tell you the 6th variable, which is ROI. And of those variables, some you control, some you don't control. You don't control Bitcoin difficulty, you don't control the price, right? You can control the price you buy machines at. You can choose the machine efficiency you purchase. And to a certain extent, you can choose to set up shop with the electrical price. And sort of a secondary variable is the dollar per megawatt capex it costs you to build out your electrical infrastructure.
Right.
And you need that to figure out your ROI. And these variables are all fluid in time. And so you have to do time variant analysis, and you actually plot this sort of stuff in 3D. And we do that at Hive, and we always invest for the best ROI. Best ROI for our shareholders. That's what we care about, right? Low dilution, best ROI for shareholders. You can just blow money and go bankrupt as a company trying to always get the latest and greatest machines. Because when the latest and greatest machine comes out, right, they charge a huge premium for it, right? Especially in a bull market. You have a strong balance sheet. We have over Bitcoin on our balance sheet. That's almost 70 million US of Bitcoin on our balance sheet, right? We mined over 30 Bitcoin last year, right? So having a strong balance sheet allows us to be opportunistic in a bear market. And by the way, for the last 6 quarters, we have had a positive gross mining margin, even during the bear market. In 22, a lot of companies were going bankrupt. We had a positive gross mining margin, number one. Number two, we have very low G&A. We have the lowest G&A per Bitcoin mine in the sector, if you look at the quarterly averages. And so when you take the gross mining margin, right, which is, you can look at a public crypto miner and look at their financials, and they'll have the revenue minus their data center costs. You get gross mining margin. Okay, how much do they actually make from the core Bitcoin mining business? But here's what people don't talk about. The corporate G&A, your auditors, your lawyers, your D&O insurance, your office, travel, conference, sponsorship, partnerships, right? And a lot of these crypto miners out there, they're blowing money like crazy because they're just like raising stock, diluting their stock, huge banners and like, oh, we're buying all these machines and putting out these crazy press releases. And we're, they all have these like hockey stick growth charts. It's just like, that's not how crypto miners back in the day, like the true school crypto miners, before all these public companies existed. You bought your ASICs, you set them up, you mined until they were obsolete, or at least until your break-even price, right, was below water. And then you had to upgrade. So in that time, you had to make more money back than you invested. Otherwise, you're going to go out of business, right? And most crypto miners would sell some Bitcoin to cover their OPEX and hodl the rest, right?
Right.
And so that's the real way that you mine. Like my CTO has been mining since 2008. He's one of the OGs in the game. I've been in the game since 20. So this isn't something that just, we thought was a cool idea over a couple of years, a couple summers ago, like this, and so we're veterans, we're experts. And so when you look at that, that is why we bought the machines we did. We've upgraded our entire fleet very opportunistically, though. We buy 1,000 machines there, 2 machines there. We do opportunistic orders for immediate delivery when there's a really cheap price. We work with a great network of brokers. We also work with the big manufacturers, right? Whenever there's a great machine, best price, dollar per terahash for a given efficiency, boom, we get it. And we want to ROI immediately and plug them in, right? Because usually when you buy the big orders, when the machines first come out, first of all, the machines don't even exist. It gets announced. And then manufacturers like, yeah, give us 30% now. And like a year later, you'll get your machines. Then there's all these like delays and you're like, your capital's not performing, right? And what happens if Bitcoin drops? People say, oh, well, if it goes up, I've locked in my price. But like, it's just, we want to be like, okay, we're true school miners. We want the miners. We want the machines. Boom. When the S21 first got announced, we didn't buy until we knew it was imminent, and we made our order just before the holidays. And you know what? Our S21s are shipping next week. They're going to arrive. That's how we do it, right?
Yeah.
So, that's part of the game. And I think one other thing, a big hedge, a strategic hedge for us was building our own miner using Intel Blockscale chip. It's called a Buzz miner. We built almost 11 of these. We got over an exahash of our own crypto miner. And when we did that deal, the price that we had, which I can't speak to specifically under NDA, but broadly I can say it was half what the market price was at the time. And that was a huge competitive edge, right?
Yeah.
And it wasn't open to the public. Intel only gave allocation to 4 companies, and other 4 companies were the only one that went on to successfully develop, deploy, and mass produce our own miner. So I'm very proud of that. And then, the price of crypto came down, and, then we were like, wow, there's better deals in the market from the brokers, or, there's a lot of distressed sales. Like we bought some brand new S19J Pros December 2020.
Yeah.
I said, I want to see a picture of the hardware because they said it was in some kind of like customs clearance warehouse. I'm like, what are you talking about? They sent me a photo. It was like a security camera footage. All I saw was a sea of boxes. These machines hadn't even been opened yet, and people were selling them for a loss, right? So we play on the other side of that. We're like, yeah, we'll take those off your hands for $11 a terahash. Thank you very much. And we already ROI'd on that batch in 11 months, right? Because you're going to run the machines for 3 or 4 years, hopefully, right? So we try to earn ROI in a year and then free cash flow, right? So that's how we play the game.
So what other trends you see happening? Like, for example, DeFi's been talked about for some time that it's coming back. And I'm talking about DeFi because I believe that if infrastructures were in place to support more DeFi activity, transaction amounts would increase naturally. What other trends, or what do you think about DeFi or other trends? What's your prediction that's going to increase usage of computing power in the next, 4 years?
Well, I think more prevalent than DeFi by a long shot is more so AI, because I think that, I'm a Bitcoin guy, right? I believe in Bitcoin. And so if we're going to talk about, decentralized finance, Bitcoin is it for me. I think all the other like tertiary stuff, it's, might be an interesting article on CoinDesk from time to time, but I'm a proof of work guy. And I think that the real interesting stuff is actually in AI. And why do I say that? So for your viewers who have been studying AI, and I need to be careful what I say here because I don't want to confuse anybody, but if for those who maybe have a tacit knowledge, this will be extremely interesting to you. So it's all about large language models, okay? Large language model. The most popular architecture for that we see right now is something called the Generative Pre-trained Transformer, or GPT. That probably sounds familiar to you because you might have used something called ChatGPT, right? So ChatGPT is a generative pre-trained transformer, right? Which is a large language model. And they have rumored GPT parameter count of about 1 trillion parameters. So what does that mean? That model was trained on 1 trillion parameters of data. That's a lot of data, a lot. Okay. But when you use OpenAI, when you use ChatGPT, all you're doing is using a web AI API prompt. Your inference, which is when you ask a model something, is going over to their servers, which are centralized in a cluster, which is close-ended. The inference is run and the servers spit out the reply to you. And it's doing that for everybody all at once at the same time, right? So it's this mega brain supercomputer array that they've put together. But all that information, everything you ask it, what happens? Well, it's learning on your information, and the inputs and outputs are on their servers. Now, you can turn off the setting and put it on local mode, but then it loses all its magic, right? And even then, how do you know it's not still sending the performance data back? It's like uploading a photo to Facebook in 2000. Who here has done it? Everybody. Now they've got photos of you at a Halloween party, right? Like wearing a Batman costume or whatever. And so you're like, oh, now like you can never delete it. It's there, right? It's fine. But it's just like, my point is that people understand data privacy now. Right. And so companies more specifically can't upload enterprise data to ChatGPT, especially if it's client data in your law firm. Right. So what's the future? How do we empower businesses to use AI and make it simple enough? Okay. It's open source AI. That's where the cool stuff is happening. That is what is infinitely interesting. Here's an analogy. Actually, it's a real world example. IBM, their total addressable market in the 60s was five computers, I mean. Because in the 60s, a computer was the size of a room.
Mainframes, right? Yeah.
Right? Mainframes, exactly. Now, your iPhone is more powerful than those mainframes, and it fits in your pocket, right? So, we know this, okay? So think of OpenAI, right? ChatGPT is like old school mainframe that seems powerful and impressive today, but in 5 or 10 years, you're sooner than that, honestly. Maybe in a year or two, you're going to have these models that can fit on an iPhone that are completely open source and local, meaning the model itself is running on your server, right? Or perhaps you have some servers with a company like Hive, if you want real power, like enterprise grade stuff, right? That's where we come in. So we've made our GPUs available to people who want to do AI compute. And so you can get a bare metal instance. That means you have root access to your own GPU servers, and you can install whatever model you want that's open source. And you own the model, you can fine tune it, you can train it. And the difference is, what's the difference between that and ChatGPT? These models are 1 to 200 times smaller, right? So we're talking about 7 billion to 34 billion parameters. Now, I'm going to stop right there and ask if you have questions and backfill anything.
Yeah, I mean, one thing about it I do recognize just as a trend, and I think you're right. I mean, well, businesses themselves, everyone's applying some AI to their platforms, and everyone's got AI-enabled features, including if you look at, let's say, a place on YouTube, which I upload a lot of my content. I was doing some research, and it looks like the way they feed content based on their algorithm is not only on stats of like how many people had clicked or viewed or the length of viewership. It's actually based on facial recognition. So if you're a person, and maybe you don't have to have a lot of followers, but someone likes your piece of content, it's 5 minutes long and they're like 30 into watching it, and that's a trend, then that person would get fed more content based on AI looking for images that look like you. So you can just imagine like AI is being used in a very, I wouldn't say a light touch, but it's becoming embedded in almost everything that we use when we're on the computer. You just don't know it. So I think to your point, AI and how it's being used is sometimes unrecognizable to the mainstream.
Yeah. I mean, I'm giving a pretty advanced insight into how AI actually is performant and how it operates at the infrastructure level, and how this infrastructure is being democratized and how we're a pivotal part of that. Maybe just to put some dollars and cents on it, if you want to get $100 million of revenue mining Bitcoin, you need about 100 megawatts of infrastructure, right? If you want to make 100 million using AI compute, you'll need about 10 megawatts of infrastructure. So it's 10 times more profitable per megawatt than Bitcoin, or 10 times more revenue, about 15 times more profit per megawatt than Bitcoin mining, right? So that's what's really cool about it from a business point of view. But as an engineer, I love innovation and research. We're getting there by being innovators and working with people in the open source space. So I think for people that have an interest in it, check out our press releases. We did a GPU contest where we were giving away 10 hours. We already chose our winners. We actually chose 3 winners. Gave away 10 hours of GPU compute time for people doing research with large language models. And that is like the brain. That is how it works. In the meantime, how we're monetizing it, like we hit $5 million a year run rate revenue recently. from our AI compute business, and we rent the GPUs in a B2B business model with marketplaces. And these marketplaces handle the B2C, and we work with 3 marketplaces. And so it's B2B for us. And that's how we're generating revenue on the core side. In addition to that, we're doing the innovation with the large language model researchers, because what's really crazy, Arthur, is that right now you're seeing models that are 100 times smaller approximately than ChatGPT-4, but they're about like 80 to 90% as good, or even as good in more focused subject area. And that's what matters for a company, right? Because you don't need these get trained on data sets that talk about, Obama and Cinderella and potato soup. Like these things are tangential, right? Like if you're a law firm, you might have case law, like hundreds of millions of words worth of case law that you'd want to train a model on. And all your model needs to know is that expertise. It doesn't need to know about Saturn or rocket ships or, the history of Nike, right? But like these huge models are trained on all like an encyclopedia. So you just need the volume of encyclopedia relevant to you, or even better yet, make your own volume of encyclopedia. That's where we come in with the open source stuff. Because, a construction company or a law firm, they're not going to know, how do I build my own AI infrastructure, right? We're building the platform for that. So companies can rent their own servers, have their own privacy, have their own ownership of data. Everything they upload is theirs. Everything they train the model on is theirs. All the outputs of the model are there because they get the root access. It's a bare metal server. And for Hive, we just want to be an AI picks and shovels infrastructure provider. Here's your server. We've designed the backend. You're in a tier 3 data center. You've got power redundancy, air conditioning. We've got enterprise grade servers. We partner with Supermicro and Dell, and it's a different ballgame than crypto mining, right? And so that's how we're really diversified as a technology company.
Okay. All right. Well, I've been doing some research recently on this new, trend coming up in this Web3 space, and it's DePIN. Right, this decentralized physical infrastructure and how that's going to play out. Are you looking at how that's kind of evolving?
I mean, do you mean like modular mining containers? Or
yes, exactly, and how people will be using like these smaller sets of computing power, I guess, to manage these token networks, I guess. Community-based, incentivized communities.
Yeah, I mean, we've like any large-scale crypto miner will likely have some containers in its arsenal. We primarily have data centers, like, our New Brunswick data center, 70 megawatt. It's 4-building campus. It's beautiful. It's like a military-grade crypto mine, right? It was purpose-built, built from the ground up. And, we can have a mortgage on that because we own the land and the buildings, right? In fact, we do have a mortgage on it. A bank can come in and appraise that, right? A bunch of containers with some, 2 megawatt transformers that you propped up on gravel crush, in the middle of nowhere beside a transformer. Don't get me wrong, gets the job done, but that's not infrastructure, right? So I think people want to come up with a cool little acronym DePIN. Now, do we have containers? We got a few, like where we've got our data centers, and we realize, hey, if we upgrade this, we could fit more power capacity. Well, the building's being built. We've already optimized existing rack space. Now we could squeeze a few. We're talking in 2, 3, 4, 5 extra megawatts. And usually what we're doing there is immersion, where these DePINs, I guess as you call them, have immersion fluid and the miners are submerged. We do that for a little extra hash rate or R&D purposes, Sure. So yeah, that's pretty standard issue in the crypto mining world. I've also heard people talk about doing modular tier 3 containers, which is what you would need to do, for GPU or AI. But, for the most part, you need very good internet connectivity. And typically it's the tier 3 data centers. Like, for example, our tier 3 in Sweden. So we have 2 AI infrastructure outposts, one in Stockholm, one in Montreal. But our Bitcoin mine in Sweden is not in Stockholm. It's in the north of Sweden. Remember I said it's Boden by the Arctic Circle. Why is it there? That's where the hydropower is, right? We're close to the hydro dam. Stockholm is where all the action is. That's the capital. That's where the network infrastructure is, right? That's where the tier 3 data center is. Quebec, Bitcoin mine, hour and a half outside of Montreal, middle of nowhere. Old graphite mill, right? In Toronto, right? So it's 2 very different things. And I want to underscore the diversity of technological prowess that we have at Hive. We are Bitcoin miners, and we're a best-in-class Bitcoin miner when you measure efficiency and uptime. And additionally, we've emerged as an AI infrastructure provider from our roots mining Ethereum with GPUs.
Okay. Well, thanks for sharing with, you've got a wealth of information, I'm going to say, Aydin, and I'm going to wrap up this episode, but I did want to ask you just a couple of questions. This is more on a personal level. When you look at the space of Web3 or crypto, depending how you label it, Who are your top mentors or people who've inspired you in the Web3 space?
I would say that the people I get to work with on a day to day, my team at Hive, we've got a phenomenal team, great talent. And I just, we huddle every day at 7 a.m. Vancouver time. We're in 7 time zones. My CTO, he's been doing it. My general counsel, Gabe, he's brilliant. My newly appointed CEO, Luke Ross, he's phenomenal. Johanna, she's our country president in Sweden. She used to work at Fidelity, comes from the finance world. Mario, our chief information officer, has been pivotal in building our HPC infrastructure. So it's been great. And, I've seen Frank, our chairman, do so much for the gold world, right? He used to be a huge gold bug and still is. And he's in the money management business. His day job is he runs a $4 billion ETF, right? Through US Global. So we've kind of got this, like it's the Avengers, we got this team of everyone's got a different superpower. And, my buddies that I met way back in the day that built the crypto mine in Washington State, obviously they were the first guys that I saw to do it big, Jay and Paul, and had, a great team also at Fortress, Sean was the CFO there. So as to the people I've got the pleasure to work with, the guys at Luxor are brilliant, Nick and Ethan. There's just so many super smart people in the ecosystem. Even a lot of the investment bankers, highly educated, super sharp, astute guys. Ruben at Stifel is just phenomenal. And yeah, so it's going back to earlier part of this interview, when you shared your experience of all the regulation policy framework, you have, engineers, lawyers, accountants, all these sort of like coders having to come together to satisfy these frameworks. It's the same thing on a day-to-day basis, publicly traded crypto mining company, right? Go to the conferences. I see guys with startups. And then, you got to look at the guys like Jihan Wu, who was a co-CEO of Bitmain, and now he's doing obviously BitDeer, Mikri, then the guys that started MicroBT. So it's pretty cool. I met some really brilliant people at Intel, PhD level guys that were super enamored with developing Bitcoin technology. So it's just super cool. Like there's so many people I've been so excited and fortunate to work with. And our GPU contest winners are like literally AI geniuses.
Yeah.
I owe one of them a callback, and I'm learning things about like, oh man, it's super cool.
Yeah. Okay, so I guess the last question is, you mentioned that you were a CEO before, and then you moved up to being a CEO. So you've had some time to sit and play that role. What do you think are, just name a few key things to become really good at being a CEO? What would you advise early stage companies with brand new CEOs if they want to succeed in growing the company? Yeah.
No one ever said it'll be easy, right? The only way to fail is to give up, right? Yeah. That's number 2. And number 3, right? You got to zap gaps, constantly solving problems, right? And you have to be agile and fluid, right? There's no playbook. You constantly have to strategize, right? Delegate, don't micromanage. And where if your team is struggling and, you're an innovator, and your superpower can help, then don't be afraid to dive in there. Yeah. Help them, inspire them. Or if they really need your direct help, I'll crush spreadsheets still, right? I'm really good with data, right? So I'll see patterns in data that other people don't see, and I'll show my whole team, they're like, holy shit. And then I'm like, good. And then the light goes off, and I'm like, okay, now you guys run with it, right? So if you're just constantly passing the baton, giving everyone sparks of energy, be upbeat and tell the story. Let people know what you're doing and aspire for greatness, have great goals, and see where trends are going, right? Ethereum is going to proof of stake. You know what? We don't want to be caught up in that web, right? SEC is going to have a field day. Bitcoin is a commodity. CFTC, right? Right, guys, right? We're not going to. We looked at it, evaluated it. No, we're going to pass on the stake. Thank you very much. Flip the GPUs to altcoin mining. Now flip the GPUs to AI infrastructure.
Right.
Pivot.
Okay, I think that's actually, it's almost like a formula for life, right? Regardless of a startup. Yeah, exactly. Well, Aydin, thank you for your time, and thank you for joining the podcast. I'd love to catch up with you again in the future. Hey, so that concludes this episode of the Startup Voyage podcast. I would like to thank all of you for listening to this episode, and I'd really appreciate it if you leave any type of comments that you'd like to share, because it helps to feedback on how I deliver these podcasts.